Good morning and welcome to Morning Markets with True Potential. Checking up on the news from last 24 hours. Well, we saw a solid gains in equity markets overall yesterday. What was driving that solid gains was whole sets of economic data which came out yesterday. Starting here in the UK, we saw a strong positive upward surprise on house prices here. House pricing hitting once again record highs of right move index indicating that house prices rose 2.1% in April, their highest level since 2014. This is welcome relief to household wealth and household price sentiment overall, so should be all building up momentum as we move into summer months. We also got a positive reading from German business index data where businesses were feeling more confident despite feeling a little bit numbed down given the recent pricing pressures German businesses have been taking overall. So all positive news from that perspective. Across the board, across the pond, we also got a national activity data from Chicago in the US, which was again pointing towards a positive tone. Overall economy is on the firmer footing. This is also an important data point because recent data has been a little bit mixed overall. So I think it bucks the trend and sets up us for a nice summer months as we move into summer months, move into market reaction. How did the market reacted? Overall, markets, equity markets reacted positively. Risk assets were strongly up yesterday. What was setting tones was banks like JP Morgan who came out yesterday that although they see recession probabilities have increased a bit, but this is not their base case and they still see the recession probabilities are still too low. And overall, fundamentally, the US economy is on a firmer footing. So that set a positive tone for bank shares. In China, we saw a raft of fiscal measures being announced by Chinese authorities overnight. Equivalent of 3.8% of GDP measures have been announced overnight. Measures include some new tax cuts, tax rebates overall, support packages for better sectors like airline, railways and automobiles, and also infrastructure spending. These also came in on back of the last week's surprise move by People's Banks of China, which cut their lending rates by more than expected last week. We saw other sets of coordinated moves from the Chinese authorities over the past 2 weeks. So I think they've been absent for the last 18 months or so, where we have seen a raft of regulatory crackdowns by Chinese authorities overall. Will it be able to reignite the falling growth in the Chinese economy? Too early to call. This morning, markets have been shrugging those measures away and open slightly on the weaker footing. But it does signal to us that perhaps we have seen the bulk of the regulatory crackdown is probably behind us. Moving into other markets, fixed income, we saw some weakness across government bonds. Peripheral European government bonds were particularly under pressure, where the spread between German government bonds and Italian government bonds widened after Christine Lagarde, the president of ECB, announced that ECB could move as early as July. For today, fairly light calendar today. We don't have much data coming out of UK or Europe. We have some new home sales data coming out of US, which will be of an important focus because we have seen some weakness last week in housing starts in the US. We'll keep you updated on how they come through. Thank you very much for watching, and we look forward to speaking to you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.